So just a quick word on the Canada Media Fund for those who may not know us. Our role is supporting the production, the creation of Canadian television and digital media content, mainly through two funding streams, so the convergence stream and the experimental stream. We just released our first annual report last week, and you can also consult it on the website. It's fully available online. So last year, in 2010-11, we actually distributed an envelope of $337 million that came to the support of more than 450 projects in production in both the experimental and convergence stream. And we have to be aware, though, that although we are like a major Canadian player in the funding of digital media projects and audiovisual projects, we are aware that we're just part of the funding ecosystem. And so the idea this morning is actually to explore what other and what new financing mechanisms are available out there, or financing strategies, and how content producers can make the best of distribution to leverage new funding models. So to cover that fascinating subject matter, which I truly believe we can talk about for hours, we have a very interesting panel of high caliber speakers, and unfortunately not that much time. So I propose to let each of them briefly introduce themselves, and we'll jump into the discussion. Sometimes during the panel, I will call upon you to see if there's any questions and or comments. And if you'd like to tweet during the session, well, obviously you're welcome to do so. And unless I'm wrong, the hashtag is merging media with capital M's. MM2011. Those who created the other hashtag, back. So, gentlemen, shall we start? Go. Do you want to start?
Sure. So,
introducing yourself.
My name is Scott Dodson. I'm the Chief Operating Officer and founder and product owner of a startup in Seattle called Bobber Interactive. We're adding an engagement layer to financial tools. I come from kind of the game space, and before that, the advertising marketing space. And probably the most relevant piece of information for this panel is I've raised about $4 million spread across 3 different companies, primarily angel investing. Angel investments, a little bit of VC in there, but I think that's kind of the perspective that I bring to this, is kind of how media producers, content creators can frame what they offer in an investor-focused way that actually can stimulate that kind of private investment.
Simon?
Hello, I'm Simon Pullman. I work for Starlight Runner Entertainment in New York. Starlight Runner is a transmedia storytelling company. We work with the world's largest entertainment brands to increase the value of intellectual property across multiple platforms. Our past clients have included Avatar, Transformers, Pirates of the Caribbean, Tron, working on some very exciting things at the moment. We're also putting together some new business models to develop and monetize new original intellectual property across new platforms.
Is that a nice New York accent you have there?
Queens.
Chris.
Hi there, I'm Chris Harris. I'm the head of online content at Shaw Media in Toronto. I'm actually originally from Squamish, right up the road, so it's good to be home here. Squamish, that's right. When I'm not in Squamish, I oversee the content team and designers, developers at Shaw Media. So we have globaltv.com on the conventional side, and then 18 specialty channels. So we do primarily interactive pieces that where a linear television show is attached. We also do some original, non-television content as well. Looking to expand a little bit more in that environment as well. So we have funded some some series sort of that are not attached on the linear side, but our key focus is mostly on sort of I don't want to say transmedia, but trying to extend the experience of our television linear programs. So.
Chris, Mark.
Hi, my name is Mark Bishop. I'm from Marble Media, co-founder and exec producer, based in Toronto. Now, originally I'm from St. John, New Brunswick. And now,
fast.
there we go, thank you, okay. Want to see if there's any East Coasters in the room. And as I mentioned, from Marble Media, we are a, whatever you want to call it this week, whether it's a transmedia, convergent, multi-platform, content creation company, which we've held true to the idea that we had when we started the company and around my dining room table 11 years ago, which is the idea of being able to tell compelling stories to audiences on whichever platform is most relevant for the audience and for the content. A lot of our work has been within the kids space. Some of our early projects, again, actually started online and then merged over to television. We've expanded over the past couple of years to include primetime factual as well as our kids properties. And again, it's television and interactive. We have an in-house interactive department, and for us that includes everything from mobile games and web games, virtual worlds, and our own television content in-house. And last year we actually expanded our company to get into the distribution business and co-founded a company called Distribution 360. And Distribution 360 is really in the business of international sales and distribution and monetization of content on all platforms. So again, it has a strong focus on television content, but it's television content both to broadcast and to nonlinear platforms, as well as interactive content to a whole variety of different platforms.
Thank you, Mark.
Hi, my name is John Fine. I'm with Amazon. Do a bunch of different things there, but I guess I would the rubric for it all is helping facilitate other people's creativity. Either through publishing in a traditional manner, we are building our own publishing programs, or providing the tools and services necessary to do it yourself. I actually, the interesting thing about being on a funding panel is our goal is to figure out ways to allow people to create this content and make it available, and more importantly, make it discoverable, which is really the key, without necessarily needing the funding. I get out there and talk about our various services and usually launch the discussion by talking about no money down. And in fact, tomorrow I will be taking people through all that, I guess, in the morning. My background is as a lawyer in publishing and also in broadcast media. I was at Random House for a long time, at NBC for a long time, at Inside Edition back when OJ was on trial. Generally from a First Amendment standpoint, how many U.S. folks are here? Very nice. Excellent. Woo! We'll have the national anthem later.
No New Brunswick people, though.
So my view is this is an incredible opportunity for people to create in a way that 10 years ago you couldn't. It's also an incredible opportunity to reach an audience that on your own you really could not reach 10 years ago. But it also means that everybody else can do the same thing. So there are some challenges to be met as well.
Interesting, Lance. Thank you, John.
Yes, thanks for having me here today. It's good to be back in Vancouver. I am a storyteller. I tell stories. I'm platform agnostic. It doesn't matter to me what they're on. A lot of the work that I do is very much about pushing boundaries. It's very disruptive at times. It embraces disruption. And I'm very interested in this concept of story research and development, how I can better fund the work from a variety of sources, how I can free the creative, whether it's me creating or I'm co-creating with other people. So a lot of the stuff that I'm very interested in and that we're driving with in terms of with the workbook project and just the other things that I'm working on are, it's not an and/or proposition. I work within the studio system. I work, it's like top down, bottom up. For me, it's whatever gets the story to as many people as possible. So in a lot of ways, it's looking at interesting and innovative ways to make use of things that we live in, like the world that we live in now, which is data-centric. How can I use data to actually make it more valuable within the stories that I tell? How can I create an emotional connection with that? How can I derive business models from that? So a lot of the things that we end up doing is very much story-driven, kind of almost like applications and stories, but it's all meant to kind of connect people. That's the core. I want to tell stories and connect people. So thanks for having me.
Okay. Thank you, Lance. So Why don't we start directly with the core question? So how do you do that? What are the strategies? And I'm going to start maybe with the content producers. What are the strategies that, for the moment being or in the past, based on your experience, you have tended to favor in terms of funding strategies? So it gives us like an overview maybe of what are the different mechanisms or strategies. Would you like to start with that, Lance?
Sure. I've done all kinds of things from co-productions to brand-funded initiatives to using marketing and promotion as a way to launch new IP and then turn and actually license the software that we developed to gaming companies and other parties. So a lot of the, and I've done participatory things where it's crowdfunded as well. Mm-hmm. So a lot of the thing, it's kind of what's best for the project. In a lot of ways, we'll start and we'll initiate. We have a project that we're running right now that's an experiential learning project that launched like a week or so ago. It's partially crowdfunded. It's underwritten in some particular instances with a little brand support, but it's being co-created by like fifth graders. And we're doing this really kind of interesting build of a world that's like co-created with them, their imaginations, taking history, math, science, collaborative problem solving. And the underlying thing is it fits into an educational space. It fits into a way that we're able to tap a variety of funding. But at the end, a lot of the times it's different for every project, which is common for anybody that produces. You're always looking for different outlets for funding. I think what's really valuable at this point is when I started to think about storytelling in a way that was not just locked to a platform. I used to consider myself a filmmaker, right? And I think what happened was there was a moment where it was like it wasn't about telling. I wasn't shooting on film necessarily anymore. I wasn't cutting on film. I wasn't screening on film that much. So why was it defining me? And the moment that I let that go, the moment that I dropped away from just that one platform-centric kind of thing that was dictating the running times of what I did, dictating the way in which I thought about the business models, the whole world just kind of opened up. And I started to think about things more creatively in terms of how I was using technology, how I was merging these things. And for me, it's as creative on the business side as it is on the storytelling side. And
so you would say that it actually opened up your mind in terms of how other ways I can do to finance my projects, including that?
Yeah, most definitely, because I think what it did was, Peter Sims has this really great book. It's called Little Bets. And it's really about how by making little bets, you're effectively leading to a big breakthrough, right?
Yes.
And it's about R&D. It's about research and development. It's about failing quickly, learning from that failure, and moving forward. And traditional media is so entrenched in this barrier to entry. It's very top down, yet we live in this world that is like rapidly becoming bottom up. And so I think the sooner that you embrace those participatory aspects, you understand how to make those work for you, there's all kinds of new value propositions, and there's all kinds of new models that come from it. Just really quickly, and then I'll take it further. I write a column for Filmmaker Magazine. It's called Culture Hacker. And one of the stories that struck me the most is I did this a bit ago, and I felt like I was like in All the President's Men. I met like this 19-year-old kid behind like a Best Buy. He picked me up in his minivan, and we went to like this cul-de-sac where he lived, And when we were driving there, and I'm like, wow, this doesn't sound very good already. But and then he said, hey, if my parents come home, this might be a little weird that you're over. And I said, well, that's okay. We'll just tell them what we're doing. And but what struck me when I walked into his room was there was like piles of T-shirts with designs on them and things, all the analog stuff, posters on the wall, but everything that was coming through his computer, he wasn't paying for any of it, And so he was just talking about it. At the time, he showed me I think it was like Pirates of the Amazon, like they were like literally using a Grease Monkey script and like using, he pointed to the screen and said, I could literally download now instead of buying. Showed me IMDb as like the ultimate torrent search engine. This is a couple of years ago. But what struck me was when I was going to leave, and this is the whole point of the story. When I was going to leave, I said, "Okay, well you can get it online for free." And he's like, "No way, man! I'm going to buy multiple copies of this when it comes out." So like for him, it was the value proposition. It was where the value sat. So a lot of the things that I think can help everybody is to take that moment and think really about how are people consuming these things? Where is that value proposition? And once you start to work from that value back, there's all kinds of opportunities.
Okay, so you seem to turn towards the community. What do you do, Simon? What are the preferred kind of funding strategies that are used? at
Sure.
Starlight?
Well, obviously at Starlight Runner, our core business is work for hire for very, very big brands and tentpole properties. Clearly, our value proposition is fairly clear there. Companies are making huge bets. $200 million on a franchise, and what we can do is essentially, I believe, add $1 billion to the lifetime value of that franchise over a decade through various platforms, through building up the IP. So that's not really a problem for us finding money there. But the original IP, I'm going to really follow all of what Lance said about the notion of small bets. That's what transmedia does. It allows you to get things out there to establish a few IPs. For me as well, I think it's a very important notion nowadays is you're building a career. You're building yourself as a personal brand and continuity between them.
Okay. And what about you, Martin?
Well, I mean, again, I think for us, it's really a variety of different sources in terms of where the money comes from. I mean, as we were talking earlier, and it was interesting as we came in the room and what Matt was talking about just before the panel started. I mean, we've worked really hard to grow and build our company and have been able to leverage a tremendous amount of dollars through a number of these public and private sources, people like the Bell Fund, what was the Telephone Canada New Media Fund, the CMF, and all of these great sources. But again, what's interesting about these funding mechanisms, and they are wonderful, and they have really helped us grow our company. We're not working in the dining room anymore. We have a great shop and a great team in Toronto. But there's actually a tremendous amount of customization that goes on with each of these funds, and actually convincing the fund that your project is one that they should be investing in. And case in point, years ago, we did a project called This is Daniel Cook, which was a preschool live action series. And we wanted to create a online world for Daniel, where preschoolers could actually come and play. And it was interesting because the funding agencies wouldn't touch it because they weren't convinced. And this, again, was 8 years ago, so to give everyone some credit. But they weren't convinced that preschoolers were actually online. So we were rejected in our first round of financing of going out and trying to put the money together. So we started developing the idea further, and we did a bunch of focus group testing, and then we found this one beautiful report that PBS had done that talked about this next generation, the idea of lapware, which is kids sitting on their parents' laps, and we used that and went back and lobbied for it, and were able to secure the financing. And lo and behold, it becomes one of the top sites that Telefilm's funded. It becomes wins the Prix Jeunesse Web Prize, with Japan Prize, and all these things. And again, I just think it's to that point that if you believe in something, and all these funding mechanisms are out there, but it actually takes a while to convince people sometimes. In addition to the funding mechanisms that exist, we also do a whole variety of things, whether it's partnering with other companies in terms of co-productions that were talked about. We also do partnerships with not-for-profit organizations, because what's interesting is they can leverage other funds and foundation money, even in Canada, that we as a private company can't access. And then we also work with advertisers as well. And each of these different sources of financing gives different flexibility for how we can finance the content.
Okay, so we were talking also about how the marketing could actually be used indeed to leverage financing or generating revenues in order to finance and to fund, like creating this kind of circle. So what's the role of maybe then distributors or market channel partners, as we were using that word this morning, that John found was very funny. So what is your role, guys, when content producers come to you?
Well, I think we talked a little bit about it earlier, but awareness is. There's an amazing amount of democracy around the tools that are out there. There's just so much content being created, which is an amazing thing. But at the same time, the discoverability factor is an issue. So part of what we do bring to the table is that sort of that mass eyeball, that the huge marketing engine behind it as well. We've had a little bit of conversation in the back about that, and to me, I think that's part of what we bring. I love what Lance was saying earlier. Part of what we get pitched a lot of times is a web series, and I think a lot of people think about, well, it's a little bit more web than the actual series. I love the idea that it should be a series, and what think a little bit more less about the hows and more about the whats. And to me, sort of, the kind of thing that we would look to fund would be more sort of that kind of a thing where it's less about sort of how the technology can push things forward and more along the lines of what's the story, what's at the heart of that. Because as soon as you start moving more towards how you're going to execute things on the technology side and less around what the heart of what the story is, you tend to sort of lose focus. So I mean, I don't know, I'm kind of going off a little bit of the model piece, but I mean, again, I guess back to the democracy element. I mean, what we bring to the table, I think, is just the mass of awareness in the audience, I think. So.
Okay. So, John, you were saying you are not actually intervening to fund projects at the very beginning.
Right.
Actually, you were just even advocating that you don't need money.
Well, I mean, I really just would echo what we just heard. I mean, Amazon offers a platform. And our goal is to essentially, particularly, and I'm going to focus on books, though I recognize that many folks here in broadcast and film, our goal is to make every book available in as many formats as possible and as easily accessible as possible so that more people are reading. By the way, that sounds all very pie in the sky, but it's because we think we'll make more money that way. And so we don't do, generally speaking, partnerships in terms of creation. We've done it a couple of times. It's not necessarily our strong point. And in fact, the couple of times we have done it by, say, obtaining movie rights for a book in an effort to monetize the entire development of a work from beginning through to its life cycle. Whether it's book, DVD, whatever, comic book, video game. We haven't been so successful at. We do some limited funding on a not-for-profit side. I have a giving program that's very focused on writing. But really what we offer is eyeballs. And the key thing, I think, that we are working on and that everybody else needs to work on is, yes, we've democratized the ability to make this content. Again, how do we help people then find it? And really, the key thing is most of the time, if you're coming up with something new, people aren't going to be looking for it. So part of the game is how do you find your audience? But the other really, really crucial part is how does your audience find you? Whether that's what I call virtual hand selling on our site, using customer reactions to say, okay, if you like this, you might like that. That helps with discoverability. We also know that, for example, particularly in an online world, publishing used to be covers sold books. Well, you know what? If you're searching online, covers don't sell books anymore. Metadata. Metadata is the new cover image. Having as much information about you and your book as possible, or your film, or whatever project you might be working on, online makes it easier for people to find it. And we've developed a variety of programs that are focused both on Amazon site, since we already have a huge audience that comes traipsing through, but also off-site, so that if people are searching on Google, from an SEO standpoint, we'll surface, that author's page on our site will pop up first. Basically what we recognize is you can have a great website for your product. You can have an amazing producer who creates a great website for you. At the end of the day, though, particularly on the book side, your homepage for your book on the internet is the detail page, the page that sells the book on our site. And helping people populate that so that it pops when people don't realize they want your book until we put it in front of them, that's sort of what we're working on. That's where our focus lies. That's where our investment is.
Okay, so you're saying that obviously one of the core issues to being discovered or seen by our audiences, which connects back to actually the whole thing, an issue of building your reputation. So in that context, what are the pros and cons of self-publishing, like you've been doing, or self-distributing, like you've been doing, Lance, versus indeed using using a bigger platform to drag maybe more eyeballs? And is self-publishing a bad idea if you're indeed launching for the first time on the market a project and that you haven't yet maybe built that reputation? Go ahead.
I was just going to say, you might not have a choice, right? So many, many people are driven to publish on their own because they haven't been able to break through the traditional curatorial gates. And maybe, that should tell them something, but at the same time, from my perspective, more speech the better. The best of that speech will rise to the top eventually. I guess I feel like the decision about whether or not to do it yourself is so circumstantial and so individualized. Frankly, no matter whether you publish yourself or you publish with a publishing house these days, the writing and creation of the work is really only the beginning. You really have to invest. Even if you are published by Knopf or Random House, you still need to invest an incredible amount of time and energy in getting your name out there. In fact, many of these companies now won't agree to publish you unless you've already established a platform, which is a role reversal. 20 years ago it was you went to a publishing house and you gave them control of your work because they would build a platform for you. And they would help you make the work better. A lot of that value proposition has dissipated over the last few years. And so people can do it themselves, but you have to sort of have the cojones and the energy to get out there and self-promote. And I say you have to do that when you're self-publishing, but as I say, you sort of have to do it even when you're not
also when you're
self-publishing.
using a platform. What
Exactly.
do you think about that, Lance?
I think in some ways it's kind of what I'm really driven by right now is this idea that storytelling, and I think it's an amazing time to be a storyteller because, and it's not necessarily because of the democratization of the tools, it's really because story is going to drive the next generation of mobile applications, social networking, social media. So if you start to think about story a little bit more in a software context, and you start to think about the value, the scale, how you scale things, you start to look and come up with these new kind of models. And at that point, the discoverability side is really, going to be driven by a base or by data or whatnot. I mean, when I make a choice to do something DIY, it's creative choice. It's a creative choice that I want to do. It's not like it's a fallback and it's the only solution I have. I've done it many times where I've turned down other offers for the work. So for me, it's a creative choice. Yeah. So, but I think fundamentally, like if we're talking about funding, we're talking about it really comes down to an underlying value proposition. What is valuable? Like discoverability, you have that element of where data is going to help us discover things more fluidly. But then you have the other thing of when somebody does land there, what is it about that work that's going to really pop for them, as was said? But I think it's also looking, and one of the things I'm most interested in right now is this idea of co-creation, right? If you think about an audience and you think about it as a pyramid and you take the top 5%, right? Those are people who are maybe really active at producing. Down from there is like 20%, maybe people who are a little bit more engaged. And then the 75% are like the most passive, right? As soon as storytellers start to embrace, because I think audiences are actually ready, and I would argue that audience is the wrong term for it. I think they're actually collaborators. You can start to move and change the way that pyramid works, right? So the more I start to go out with a call and response that's clear to the audience the way I want to work with them, the more that pyramid's going to shift. Now, the value proposition is it might be 5% right now, but if you look forward and I start, and I'm doing this with people, I'm doing things where they create designs and then I license those designs from them and then I sell and I work with them. They become distribution output points for me. They become promotional outpoints for me. It's not dissimilar to how open source software builds itself with like teams of people, come together, and that's how something like Linux can compete against something like Microsoft, which has considerably more market share than they do. I mean, money, resources. So I think it's a scalability issue, and it's looking at how we can cross-pollinate those things. So it's like when we talk about audience, it's like audience sharing protocols. It's like, how can somebody share with me the people that they have? But I think maybe in some cases, it's empowering those people. Because I think if we empower those people, then we will find those new business models. I mean, I'm seeing it in my own work.
Would you compare that, or is it like crowdsourcing kind of thing?
Crowdsourcing right now is just scratching the surface. Kickstarter, Indiegogo, just scratching the surface. I'm talking about really igniting an opportunity of creative entrepreneurship with the people who are formerly known as the audience. Because audience is dead, as it's traditionally known.
You see that in fan fiction sites, right? You go to websites that, alternate endings to the Harry Potter series. It's all fans writing their own stuff. And sometimes they're encouraged to do it, and sometimes they are severely discouraged to do it. But it is sort of the prototype, I think, of what you're talking about.
But the law is behind the curve on this. So what needs to change legally in order to facilitate that?
Say that again.
Well, clearly, our whole entertainment model is predicated on the notion of a company or an individual owns an IP. If everyone's participating and adding value, and then money starts to be generated, how do we deal with that legally?
Well, I think you can set up the playing field. I mean, for example, certain companies are happy to have those fan fiction sites up there because they view it as marketing, and they view it as feeding sort of this beast of a growing audience, and so they just let it be. When you put stuff up there, generally speaking, you can accept terms of service, and you basically have turned over your intellectual property rights to them. And then there are other companies that feel that the cost-benefit analysis doesn't play that way. And so they will go after folks who are in some way infringing on their trademark or copyright and just have a different approach.
Did you have to go through that, Lance? Like building terms of conditions?
One thing actually is a nod to Amazon Turk. Like some of the stuff that we're doing right now takes like these micro tasks and assigns them and takes models from software development where somebody says, oh, I'm going to track this bug all the way through. And we're looking at like how can we kind of create almost like microcurrencies or ways that we can do micropayments to the different people who interact. So at that point, the ownership might be a collective ownership dependent upon what the property is, but it's all tiered in terms of how much people are involved. So it's like kind of taking social rewards and mixing it with like a very clear-cut set of tasks. So it's interesting because some of the stuff, yeah.
Interesting. And Mark, tell me, why did you feel as a content producer to sort of point to actually add the distribution component to the whole chain because you wanted to control that full circle?
Absolutely. I mean, for us, that was really an important part. I mean, as our company was growing over the past number of years, we've always partnered with third-party distributors to sell our content internationally. And again, at Marvel, we produce both the television and the interactive component. And what we were finding for a number of years is that traditional distributors would be interested in that idea, but when it came down to actually taking it internationally and selling it, the low-hanging fruit was always selling the television property, and the interactive was truly an afterthought and was a bit of a pain in the ass and to them. And it was to the point that we would be in a market, for example, and be meeting with their sales team, and they weren't even aware of some of the interactive content and games that we had produced that we were expecting they were selling. So what we did is we took matters into our own hands a year and a half ago and launched this company that can really look at both television and interactive together. And again, acknowledging, I mean, we're not kidding ourselves, the television content has more volume and does generate more revenues internationally as we sell it right now. But we see that changing. We see a huge appetite internationally from so many different sources. I mean, we're now parsing out our games, back from, I talked about that Daniel Cook website we did years ago. We're still removing some of those Flash games and licensing them to game portals and mobile carriers in territories where the show doesn't even play. So we see huge value in that, but for us it was really important to control that part of the chain because, of course, we have our own series of investors that have invested in each of these projects, including the funding agencies and the broadcasters that appreciate seeing some return on investment on these projects. And we really saw that again, the idea of the long tail, and as we look forward, owning all of this content is one thing, but it's really important that we're in the business of internationally monetizing the content as well.
I have a last question on this theme, and then we're going to change to talk about another type of funding, which would be more like corporate financing. But my last question would be, we heard different things, you definitely grow your projects, finance and co-create them with the community. You're like more towards maybe using funding agencies. You definitely work with big brands. So, but are all of these strategies mutually exclusive? Can't we just use them all? What would be like creating the perfect mix? Who want to take on that?
I'm doing a lot of stuff that mixes them already.
Okay.
I'm doing things that are funded in co-productions out of Europe, currently looking at different ways to format television, using things like transmedia as a piloting mechanism in doing that with broadcasters. Using brands as underwriting for certain projects. I mean, I don't think it's, like I said before, it's not an and/or proposition. It's like, I think it's thinking about it more entrepreneurially. Thinking about it more in ways of like, where does the money flow, and how can I maybe get closer to that flow? And if you look at certain online models, a lot of it has been predicated, and off of Web 2.0 was predicated on audience, and you were going to get to a certain point, and then certain content models haven't necessarily worked in that context. You know, it's been more difficult to prove the ROI on them and to demonstrate that. But I think when you're kind of moving forward in terms of creating the work, it's not, you know, the audience is one part of it. But what's benefited me tenfold is the understanding of the market, doing the research, finding out who I can strategically partner with, and going to them with something that's mutually beneficial.
How
You know what I
difficult
mean?
is it, though, to harmonize all of that? Because let's agree, when you're using someone else's money, you know, there's always a counterpart. There's always like constraint or something that is expected from the other side. Matt was just opening, you know, with the whole lists of,
Yeah, I mean, that's
of
just what I wanted to-
administrative burdens that we're putting by
I just wanted to jump in on that
public
because
agencies.
I absolutely agree, and we try really hard to, and in fact I think we've employed a little bit of all of these models in quite a number of our projects. There are challenges that exist with the funding mechanisms in the country that make it difficult to do things even in terms of working with advertisers. It becomes very challenging because some of the funding agencies won't recognize that, and that will actually throw the fund offside, and so it becomes a real problem. Again, is that fixable? Absolutely, and it takes dialogue, it takes being involved, which I know a number of people in this room are involved with organizations like the CMPA and others, to actively talk to the funding agencies and express these concerns, because this is the new economy. This is the way we have to finance our projects. There's not one easy route to do this. It will be a multitude of these sources. And again, the great thing that we have as Canadian producers is multiple layers of government that have invested and will continue to invest in our industry to provide these funds. So we have to find ways to leverage these dollars into these new models without throwing the funds offside, and at this point, in many cases, it does.
Just before I jump into the other theme, is there any questions so far? Yes. Okay, we're going to take two, and then we'll continue. Yeah. Gentleman, and then the lady with the black jacket. The gentleman with the glasses. Try again.
I'm just going to throw this out at Chris and put him on the spot here.
What are you doing, Alan?
One thing that nobody ever really talks about much, but I think it's worthwhile for producers, especially convergent producers, to be aware of, is the concept of benefits dollars. And a company like yours that has been acquired a couple of times basically incurs an obligation to spend additional money and open up the purse strings. And that can have a very favorable impact in some cases on what you can do with a convergent project with a broadcaster who has that obligation versus one that doesn't. I'm just wondering if you could just explain a little bit about that concept, because I think some producers aren't aware of that, and that there are benefits perhaps in going to a broadcaster like Shaw Media, who has significant obligations.
Yeah, no, absolutely. I mean, as you pointed out, over the last 5 years between the CanWest purchase of Alliance Atlantis and then the Shaw purchase of CanWest, that triggered a lot of benefit dollars and obligation, as you point out, to reinvest in the Canadian system and into what's described as programs of national interest. So programs of national interest are typically scripted drama or comedy. They can be award shows, docs, things like that. So we have a significant amount of dollars to reinvest back into the community over a finite amount of time. But what we do, I mean, internally, we don't tend to think of it as benefits. We think of it as budget. We think of it a way of how do we best make a really great property, and again, not just on the television side, but rather holistically. We did a great project with Mark and with Marvel over part of the Alliance Atlantis benefit dollars. And again, that project launched a year before we even had a TV series. The TV series actually came out of this greater digital property. And that's the kind of way that we're looking at it now. It's less of just, hey, we've got benefit dollars, come knocking on our door, we've got extra dollars. We really want to do things smart and strategically and make sure that we're working on big projects. But yeah, there's a lot of opportunity there, I think, on some of our grants.
And I do want to say that, I mean, what's been great in particular about that project, and it's called What's in a Name. You can check it out, History, 8 p.m. on Monday nights. To give it a plug.
Thank you.
But, I mean, what's been great about our partnership, and it's been interesting, we've been working on this project for 3 years, but as Chris said, it actually started as an interactive project, and, I mean, to your point, Alan, I mean, it started because there was a benefits package that existed
from the Can West purchase of Alliance Atlantis, which was to be allocated towards interactive. So it was an interactive first, but again, the benefit of, is the money, absolutely, which is great, but the priority that was placed on that project to incubate something on the interactive side, to grow it, to bring all of the different departments around the table, which is huge. I mean, being able to launch something online a year in advance, to have the support of marketing and PR and sales and programming and interactive is no small feat, but it was clearly a priority for the broadcaster to develop something. And it's been a great success. It's been great online. It's been great on broadcast, and continues to grow. So, again, the nice thing about those benefits is both the cash and the priority that comes with it.
Worth looking into that. There's a lady with a black jacket.
What I haven't heard anybody explain is how you can net present value any of this so that you can raise the money to create your projects. I mean, I understand what you're saying, Mark, about and Chris, about the funds available in Canada. So Canada's fairly unique in that respect. But I come from a world, TV and film world, where the raising of money is advances against territorial bundles of rights, the exploitation of bundles of rights. And I know we're seeing that diminish, and we're seeing the OTT, and it's just a maelstrom out there in terms of a changing paradigm. I hate these words. Changing thing. But I still don't understand how. We're very interested in interactive. We do a lot of interactive with our TV shows, where I think it's just the best fun I've had since I was about 25 and first got into features. I mean, this is like, okay, this is a whole new thing. But I don't know how the hell to finance it. The broadcast interest, to the best of what we've found counted so far, has been, yes, we're interested in interactive, but only really to drive eyeballs to the television experience, which is where we're currently getting our advertising. On the international frame, the international broadcast is very interested in the interactive, but they don't actually want to pay for it. It's like, doesn't that come with? Like, we talked about the endgame thing, Astral wants it in French Canada, but they don't want to pay for it. So how do I raise money? If I forget Bell, forget some of the opportunities we have in Canada, which are great, how do I raise money up front to make an interactive application that I can then monetize through the Amazon, through the various other mechanisms that we talked about?
Challenge.
So how do I actually make it first?
Can you pitch to Coca-Cola, or?
Well, I'll just jump in for a second, Alex, just to talk about this, because I think one of the interesting things that we've been able to do is to actually leverage what we have with these Canadian dollars that we have from Bell and these other sources, but to actually take that and leverage that internationally. And so, case in point, we did this project called Splat-A-Lot, which is a kids outdoor challenge series. We built a huge online world that we couldn't afford to pay for out of Canada, so we went to the BBC. And we were able to show them, they wanted this huge, rich, interactive world. Again, they didn't want to pay for it. So what we were able to show them is, look how much money we can raise in Canada, and all we need is your chunk of it. And because they could see the size and the scope of it and what it was going to become and how it could feel customized and that it would work for them, they could make the investment. We did the same with ABC Australia. So just like we did our pre-sales on the television series, we did pre-sales on the interactive, but off the back of the funding that we were able to raise. And of course, to the funding agencies, it shows that other people have already invested in the interactive. I mean, there's no question it's easier to do, obviously, for the kids' properties, and the kids' broadcasters have much more of an appetite, both domestically and internationally, to make those investments. I mean, we've also tried doing this with advertisers, and to some success, but also to some real challenges, because of the different advertising restrictions as it relates to kids' content in different territories.
Which actually is an old model. I mean, if you think about the beginning of television, all of those shows in the 40s and 50s were the Colgate, Palmolive Hour, et cetera, et cetera. That's very interesting.
But in terms of the interactive with television, with the broadcaster, what we're finding is that the revenues that may accrue through the interactive, the broadcaster wants.
Absolutely, but what's interesting, and now, absolutely. But now what we've started shifting over the past 6 months is being able to leverage all of these funds, but then to actually build something. So yeah, we'll build them a microsite and put a couple games on their website, but what we're actually doing is taking that money and we're building, right now, for example, two iPad applications. So the iPad applications we control. Now, yes, up until the point we put them on the Apple Store in all of these territories, but to the point that we actually manage those revenues coming in, and absolutely we share it with the broadcasters. But that's something that we can use those dollars that we're able to raise to actually build something that we own. And of course, in Canada, we share more with the Canadian broadcasters, and then we give them a piece of the international, and have carved up some models that way. So it's, trying to build, some of that traditional interactive games and content to live on their website, but build things that can be standalone, that we can control and monetize ourselves.
Maybe we're going to bring back that question of co-production later on, too. Excuse me, I'm going to ask you to keep your questions because we're just going to continue the discussions, but keep them. There's the lady here and the gentleman there. I saw you. Keep you in mind for the next round of questions. I'd like to jump into another strategy of funding, which obviously we've been talking a lot about per-project financing, which is that constant struggle project after project, to actually build partnerships and financing structure each time. So some other, especially in the digital media environment, have been kind of looking towards other strategies that are more like at corporate level, seeking for private investment, equity investment, or corporate ventures. And in that sense, you've been one of those have been testing that. You told us for even the three previous companies raising more than $4 million. So what about that type of funding? What would you tell about that, and why did you actually decided to favor that type of strategy?
Well, I think, I guess, let's see, where to begin? I guess the thing for me with the reason that we like private equity financing, and I don't mean private equity firms, they play at a much different level, but is, for the most part, you do, I find you do retain a lot of creative control of what you're doing. You need to kind of enroll and you need buy-in from your investors that you're doing what's going to ultimately give them an ROI. But they're investing in you as a person and as a team, and trusting that you're going to figure out a way to deliver that. When I look at this, I don't think it takes additional layer of work because you're no longer just thinking about a single project and the return on that, but you're trying to build kind of a one more meta layer on top of that, which is some sort of a structure which is going to provide them an ROI. So there's an additional level of okay, now I've got to form myself as some sort of a corporation, maybe that's going to have some shares that are going to be that are going to create liquidity. But it's really not so different. And when I talk about this, I want to make a real clear distinction between venture capital funding, which really is not very high-risk capital at this point. The venture model's kind of coming apart in various ways, and for the most part, venture capital comes into businesses that have already proven themselves and want to scale. They've built some sort of engine where you pour money in on one side and more comes out the other end, and the venture capital firm wants to pour more money into that system. I'm talking about earlier stage, venture companies that do seed stage, angel investors that invest, $50, $25, $10,000. And I think it's the kind of it's an interesting convergence because I think there's more and more of that happening, and at the same time, the cost of media production is dropping to near zero. I'm an advisor for a mobile game company that that essentially is pre-launch, pre-revenue, but they're building a pretty elaborate product, bootstrapping it, and essentially going to raise money only for the marketing step. And I think and so I think that what it requires first of all is a sense of instead of the challenge is you can't no longer just be audience focused. You've got to create a product that's going to be very compelling and engaging to audiences, but you've also got to understand what the motivations of your investor are. And everybody kind of thinks it's just ROI, but it's really not. Most angel investors are successful entrepreneurs who actually want to give back, right? They want to be a part of something where they don't have the time and energy. It takes a tremendous amount of effort to obviously to be the CEO of a company or the main producer of a project. But they get to live vicariously through these projects, and they love innovation, right? And they love being part of. It's a legacy that they were part of some sort of major innovation. The stuff that you're talking about, Lance, for example, I think is imminently equity fundable at the angel level, right? Because it is speculative. They're not stupid. They realize that 9 out of 10 of their investments perhaps may not come to fruition. But the ones that do, I mean, what you're talking about and kind of engaging the audience in a completely different way and making them part of the creation process, that's wildly innovative. It's highly disruptive, right? And it's the kind of thing that absolutely would be fundable. For example,
is there any? Why would you actually? Would you go to that type of financing, Lance, or what would deter you from going there?
Well, I think it just really depends on what the terms are, and it depends on how far along we are, and it goes back to the model of the example you just gave with like bootstrapping and then bringing in the marketing. Like when you have a startup, you're always trying to get as far as you can before you bring in subsequent rounds, so you have more, you retain equity within what you're doing and control inevitably. I sit on a steering committee with the World Economic Forum about the future of content creation. And a lot of the discussion is kind of around what these things, these shifts in authorship mean. What does it mean between user-generated, professional? What are the policy issues? How do you kind of look at it? And a lot of it is kind of looking and saying, okay, how can story fuel development? How can story fuel innovation? And I think when you kind of look at those things, it's really kind of fundamentally a matter of there's only a few places where money's really going to come from. It's going to come from private equity. It's going to come from point of purchase. It's going to come from brand infusion. It's still the same. The only thing that's different now is a lot of that idea of the co-creation, which I think is really exciting, is it's a whole new kind of place that you can push into with it. So I think from my perspective, if the investment made sense and it was right to what I was trying to do, then I would definitely consider it. Because the one thing that you want to do is be able to scale. You want to be able to look for infrastructure builds. You want to be able to look for strategic partnerships so then you can really take it to market, depending upon what you're doing.
We only have 5 minutes left. Does that include the Q&A period? Okay, so I want to give back maybe the chance to the public to ask some questions, but maybe just to wrap up on that, I lost my idea. So why don't we just go to the questions you had? Sorry. Maybe just wait for the mic. Sorry. Go ahead.
If you see a blurring line between audiences and creators, audiences become co-creators. At what point do they then also become part of the owner of the IP? So I mean, there's a very sort of thin line, blurring line between who pays and who gets paid.
Well, I think I am experimenting in the co-creation side. We're doing this large project where I have like 50 collaborators right now, and like I said, 5th graders are steering. They're in control of the vehicle. They're taking us to places that are absolutely amazing with the creativity. That is an experiential educational learning project that's set up in a certain particular way, but it's set up as a way to kind of experiment with this. The tools, the infrastructure to co-create isn't even there. You might take something like Basecamp, or you might take Google+, you're kind of cobbling it all together. So effectively, we're at this point where this whole idea of co-creation is totally new, right? So the models that come from it just need experimentation. I think fundamentally, one of the biggest things that I see with the entertainment industry is a lack of R&D, a lack of taking the time to do research and development to really help them to understand what these new models are. How can you get there? And it's this fundamental thing where it's asking the wrong questions. It's like they're so obsessed with answers that they're asking the wrong questions. And I think in some particular ways, the gray area between who owns what is something that will come in time. It's something that we experiment with.
As we try to build a publishing house that is very author-centric and try to do it in a way that sort of addresses the stuff that most writers will tell you drives them crazy about publishing. When we go to an agent with a new way of approaching it, generally it's, whoa, I don't know what that means. Let's go back to the old model. And so that, I think, just to reinforce what Lance is saying, I think in many ways the existing industry is its own worst enemy in terms of a lack of creativity and risk-taking.
Is there any other question? The gentleman here.
I got big mouth, so.
Wow.
First of all, some really great minds on the
Absolutely.
From that point of view. And to Alex, is that was just first of all, Chris and Mark and Lance, thank you so much for just being story focused and not focused on technology. But I wanted to contribute here from the model that we're using, your neighbor to the south. So everyone wants story now. Every brand wants a story. Every technology wants a story to ride on top of it. So what we've managed to do with network television, actually, is to go out and it's the entrepreneurial spirit. First of all, Hollywood will change when you're making money. And they see what you're doing. That's when they will change. Or when Tim Kring is making money and doing this. So what we're doing is, we're saying, okay, there is a technology company, there is a technology that sits on top of the neat story. They will pay for the interactive application, which will showcase their technology. They will also let that story be distributed on a mass level to drive people into a premium level of technology. In addition to giving you the budget for that, which we have gone as high as $3 million right now, in addition for that budget, they will also pay for product placement in the television show and also make a media buy on the network. So this was an arrangement that had not been thought of before because you had product placement and media buy, but marketing paid for the interactive. And now to say, well, there's a different way to finance the interactive, and it's this creativity amongst guys like you that say, okay, there is a different way to do this. And slowly but surely, to Kurt's credit and what he said, these network executives, they have kids, and they see what's going on. And like NBC is very willing to experiment. There are a lot of good things. So I just want to say it's the entrepreneurial spirit that I appreciate here. And whoever put this panel together, you're just brilliant. It's a really great, and you, even with the cult, you've done a wonderful job.
Who are you? I'm sorry, who are you?
I'm Brian Sethurst, and I was invited to judge in 360, but I'm a company called the Opportunity Management Company.
Thank you, Brian. Well, thank you all. Very unfortunately, the question I had just came back to my memory, but it's too late. So thank you all again. You are absolutely right, Brian. We have a fantastic panel. Gentlemen, thank you very much